All right, what is happening, people? Happy weekend, happy Saturday. Let's get to the point. I'm gonna share my outlook for gold now that we saw what I think is an evident and inevitable bullish breakout. This comes after the Fed cuts rates, and Powell's speech was more hawkish than most people would want it in Wall Street and the economy and all that. Now, what does hawkish and all this means? Because I was also kind of frustrated and confused with all these terms because the media is going to do anything to confuse you. Basically, if the Fed chairman, whoever it is, comes out and talks positively about the economy, that is obviously good, and so things tend to rally. I mean, the stock market, gold would dump because gold is a protective asset. So if there's not a risky environment, there's no point on hedging your trades with gold. So whoever owns stock is gonna add to stock and then basically transfer money. And the opposite way, if the Fed talks about risk, about employment coming down, about inflation not under control, or worrying about inflation, then that means gold is going to go up because it's uncertainty. So that being said, the fundamental behind this move was the Fed cutting the rates and Powell not necessarily being optimistic about the economy. So those are the fundamentals, or the most important one. And now for price action. So I'm gonna go from the weekly time frame just to get us basically the bigger picture. When in doubt, zoom out. Okay, so clearly the weekly is nice because it's bullish, and this is what I love about the weekly chart. I'm gonna start putting a few lines here. These are gonna be my important levels. Okay, notice the bodies of these two candles is already broken. Okay, this is about to pop. I'm telling you, this is gonna go straight to 5,000 the same way this broke from 3,500. Okay, so you can measure this, and then this will take you to 5,100 from here to maybe January, or yeah, basically. I think. Okay. The reason I say that is because there is a pattern here, which is this ascending triangle. Okay, basically, that's what it is. It is huge. It's humongous. This is very bullish, guys. This is not, you know, overbought. Okay, is there a chance for a reversal? Yes, but price is not. It shouldn't close below 4,000 because even lower. I mean, even higher, 4,100. I think 4,200 is gonna hold, but I'm gonna tell you what I mean by holding. Okay, we could dip below it, but what I mean hold is when a candle closes above 4,200, a weekly. Okay, another important thing I want to point out here is this little imbalance right there. You can't basically see it until you widen your chart. But this is where I think next week's entry might be, potentially, maybe. I'm going to tell you why maybe, okay? We have to go down to the lower time frames because usually, again, I've said this over and over in my Discord and on Instagram and whatever, but when gold goes up, it goes up. It does not have mercy on sellers, on anybody who's bearish when it's not. So these breakouts are basically the trend. This is the trend, and the trend is your friend, and you can't expect a reversal just because it went up too much. You know what I mean? It's actually, that's what is meant to happen. It's gonna continue going up too much. It's meant to go up too much. Okay, so um, let's adjust things to lower time frames, but this is the overall picture. Okay, this is the goodies right here. You came for this. What's gonna happen? This is what's gonna happen. This is what I think is going to happen. Now, let's go into lower time frame. So daily time frame. What do we see daily time frame? Obviously, we have these, there's a big resistance level. Notice how the bodies of these candles. By the way, I'm going to look at another chart because the 4-hour time frame sometimes changes. This is my plan. This has been my plan, holding this trend line, and as you can see, that's the triangle. But let me see if there's another chart because sometimes they're not the same. I think this is okay. It's still a daily time frame. Okay. Check this out. Daily time frame, we have another important level here, which is this previous resistance. That price was struggling so much. Remember that? So when price breaks a very strong resistance, it turns into a very strong support, period. That's what happened in 3,500. That's what happened at 4,000 when it was, no, it wasn't 4,000. It was here. 360s, 3650. It was struggling here for a few days. It managed to break it, and then it served perfectly as a big trampoline. So this is what I think this is going to serve as, this area here. Notice again, there's a daily there imbalance. So we have a daily imbalance here, which is just above this resistance. So that is technically a bullish entry, a bullish structure entry. Very clean. You have an imbalance right on top or within and overlapping with a previous resistance. So it's a beautiful support because it's an imbalance that the market balances, and then it balances because there's a previous resistance. So that's why I think this level is going to hold, which is 4240. Okay, at the low is 4240 because there we have that previous resistance. Okay, what else can we probably get? If I might be switching from bullish to bearish, but I want to do things in order. But for a bearish potential move lower than these would be just below 4180, where you have the weekly imbalance and this trend line. Okay, from here to here you have a trend line, and that's where price could also respect. Okay, and so it would basically target this liquidity and maybe the imbalance somewhere around here. Okay, you could point to these candles here, this wick and these wicks. All that is also a pivot. Basically, this is a big pivot zone. So it could come back, take out these early buyers because they did leave a very even low. So that tends to be liquidity. If it were to do this major continuation from Friday's dump, I don't think Friday was the beginning of a bearish direction. It was just a normal New York looking to get a better entry. How is New York going to buy up here? So they dump in their AM and buy in the PM, and they held price. I'll show you in the 4-hour and 1-hour time frame what I mean. But this would be the area if there were to be a continuation push. 4-hour time frame. This is the chart that might change for all of you. Some brokers, for some reason, show these a bit off. Well, never mind. I think that's strange. Sometimes they do. Oh, I mean, it's not off. I mean the hour. That's what I remember. It's the timing. Some brokers show that it starts at one time and or another. Okay, so let's continue on this one. So here's a 4-hour chart. Okay, I have something interesting to show you. First of all, this imbalance that was perfectly served as this low right here. And you could then actually say that this resistance was already tested. See, that's where I'm going with this. This was the previous resistance. There's a 4-hour imbalance there. Price might bounce from here. Now, what happens? If a Friday finishes bearish, it's quite likely that Monday will manipulate that low, right? Because you have the weekly. Here's the weekly. Another key level you have to put is the previous week's high, which is here right there, 4264. And if we go to the 4-hour, that's where you had the perfect triangle right here. You see this perfect triangle structure that got manipulated. Okay, so when the market leaves those equal lows is potential future liquidity. Potential. Why do I say potential? Not always, because remember when price was coming up from 3,000, it left a bunch of those. You see all these little equal lows, all these little equal lows. Look at these equal lows here. Look at all these equal lows. Equal, very relative equal. You see all these very little equal lows. These are institutions just protecting their long trades, their major buy levels. So gold just keeps going, eventually dips, of course, and it takes the internal liquidity to the most important levels. So we are currently just basically repeating the whole thing. These are the lows, relative equal lows, that are going to get protected, have been protected, that the market shouldn't return to them. And then you have the internal lows. For example, these ones. You see these little patterns. All these little patterns that get formed, eventually they get manipulated, but the lowest ends, they hold. And right now, what is the lowest end? This one is the lowest higher end. So I'm going to zoom out, 1 hour time frame. And we have, these are the external lows, external higher lows. And so far, these are the external higher lows to these. You see, where's the internal liquidity? Right there. That's the little internal liquidity in relation to these external lows. If I also study the sessions, you can see that the market had a whole week to accumulate. Every session, New York, Asia, London, they all had the opportunity to dip below, buy, dip below, buy. Below what? 4,200. I'm going to mark it right here with a big line. There, 4,200. It's 4,222, but that's it. Okay, so I'm going to mark this color red. This is your major pivot price. If price closes below 4,200, you can be certain that it'll target the weekly imbalance and potentially 4,100. Okay, what do we have in 4,100? If we look, even though there's an imbalance here, the market already used it here, but basically you have these equal lows over here, and all of this could then be that internal liquidity that the price might want to target. I don't think so, but let's see what happens. Now, continuing on, I want to show you something else that's very interesting. And I've said this a bunch of times. Price is fractal. What you see in the chart in your 4-hour time frame, you're going to see it in your 1 minute or 5 minute. The same patterns, the same momentum, the same way that price moves and expands and reverses, you'll see it repeat in the 1 minute, 5 minute, 15. It's incredible. And I want to show you something that's it has been catching my attention. Check this out. I'm gonna try my best to tell you what I'm seeing. I'm gonna focus on this drop, this retest, pullback, and this explosion. Okay, what my brain is seeing, you see these double tops here? These double tops are these double tops. Fractally speaking, that's the little pattern to the and I'm also at the same time showing you the bigger pattern. Okay, so watch this. This high and this high are these highs, okay? What happened when the market crashed and it eventually came back up? You see this? So here's the crash and the market came back up. It's coming back up. So what happened? The market, I'm going to put this smaller now. The market crashed. It came back up. It made a little dip, one more dip, and then it broke a structure. So the market crashed. It came back up. It made one more dip, and it broke structure right here. Because these highs are higher than this. This is already a break of structure, a change of character, or whatever that everybody and anyone can easily understand by their own terms. But point is, price is already telling us, I'm bullish, I'm going back up. So why would there be a huge dump? Why would, and that's what I kind of I don't laugh at anybody, but I find I think like, man, it's not like that. Just look at the bigger picture and study gold more fundamentally. But anyway, I could be wrong, so that's why you also never hear me talk with so much certainty, and because it's not professional. I can't tell you that's what's gonna happen, like a lot of people do out there on the internet. They're like, I saw a post the other day saying telling somebody gold is doing this. It's just looking to break out of the pattern and it's gonna reverse. Like, how do you speak in those terms to people that maybe are beginners, that they genuinely believe you? You're just making people lose money. Just speak the truth. Say, man, gold is very bullish. I think you could sell, but be careful, because it's not. Is I could be wrong, but people are a bit arrogant nowadays, and always, and so they don't. They'll just say what's gonna happen as if it's gonna happen all the time. I can't tell you what's gonna happen, but I can give you my most honest, educated guess based on my experience, and also because I tend to do the opposite of what most people do. And I'm buying when everybody's selling, and I'm going to take their stop loss. That's my mindset. That's what I see. I see price going up. I see a bunch of people on the internet. Oh, this is a double top. Oh, this is going to collapse. Oh, blah, blah, blah. So I'm like, okay, perfect. Keep selling. I'll keep buying. Okay, got that out the way. Now, refresh. I'm showing you this move in a bigger picture. And I'm doing that by bringing your attention to this double top that is, in my brain, fractally speaking, the same as this behavior of double top here. The market crashes, makes 1, 2, break structure. The same way the market crashes from here, 1, 2, break structure. It retests and then it expands. Okay, so I'm going to place little bubbles where I'm referring to. Okay, that's the high. And let's make this another color, because I want you to see the break of structure and the pullback, which is there. I want to take this out of the way. Okay, so that is the little break, the break of structure that has a pullback. And basically, that would be this break of structure from this high that has this pullback. Or you could also call it this break of structure from this high that has this pullback. But you see how it's fractal. So this is that high. It has this pullback, which is that one here. Okay, and from there the market rallied strong, and it made a pattern of correction, accumulation, and it bounced and it continued breaking higher. Check this out. This breakout, this push, if you measure it, it still has a bit of room to go, which is the resistance, but it confirmed it. You see? And what I'm looking at there is this correction right here. This also, you could call it a triangle also. But let's continue with the fractal thing. So what I'm visualizing here is, now, if this was the big push after the correction from the break of structure after the dump, well, if we zoom out and make this big, that means after this dump and the break of structure of the first little push after the correction, right? Look at this correction. What followed this little tiny correction here? This huge explosion. This is the bigger correction, and that is the big explosion that's coming. Okay? Looking at this fractally, right? So I hope you're following me. I hope I'm managing to explain this properly. Let me try and draw it now in a different way, and you'll be able to see it. So basically, we have a move after this breakout so far of this distance, which I'm actually going to measure it differently. Watch. I'm going to measure the drop. So this is the drop that I'm trying to make bigger in my mind. This drop is this drop, okay? There it is. So there's a drop. The market has these little, this 1, 2, 3. Here it is, 1, 2, 3, okay? There's a drop, and I'm gonna do this 1, 2, 3 thing. 1, 2, 3, right? And then this is 1 right here, 2 down here, and 3 up here, right there. There it is. Beautiful, huh? And then we have a little pullback. Watch this. Little pullback. Let's make this pullback green, because that was the entry. Sorry, I'm trying to copy this. There it is. And that pullback is all this up to here. You see it now? So this little pullback that respects the structure, this bigger pullback that respects all the structure, had a continuation push from where it ends so far of this magnitude. You see? This magnitude. What is this magnitude in comparison to the drop? It's double. Look at it. I'm just making squares from the low right there to the high. I'm going to place it at the high, at the big drop, and I can see it's basically 50% of it. Okay? So what am I going to do? You know what I'm going to do. You get the picture now, huh? I'm going to now copy this guy, because if time is fractal and price in time are fractal, this will be the next move that's loading, that just started. From where? From this low. And oh, look at that. Is it coincidence? No, it's not. It's time, it's price, it's the matrix. This thing is a computer that you kind of figure out and you trade it. Watch it. Look how perfect that is. Almost to the, actually it's probably exact because I didn't put this arrow perfectly, but what did I tell you at the beginning of this video? Gold is going to move this push. Why? Because it done so in the past before. Look at this. Big push. What happened? Big push. Watch this. From the low to that high, and even this wick high. Copy. From when it breaks. Look at it right there. From when it breaks. Right here. From when the break starts. Right there. Boom. It reached perfect. That's where it stopped. It made a little wick higher, but that's where it stopped. So, history repeats itself. Price is perfect. The trend is your friend. From the low to the body candle. I'm going to take the wick if you want me to take the wick. From when it breaks, it's much higher. But I'm going to measure it from the push that begins the break, which is there. Taking the wick. If I don't take the wicks and just use the body of the candles, from when the move starts, is basically a few pips away. It's 5,100. That's going to be the move that is going to happen in probably 4 weeks. What's left of the month into January. Because if we see how price went up from 3,500 to 4,200, it did so in, I think, 9 weeks. 1, 2, 3, 4, 5, 6, 7, 8, 9. So you could probably see another, well, yeah, you're right. 4 weeks might be a bit ambitious, but who knows? It you know, as you've seen, the volatility has increased so much that price is moving hundreds almost $100 in a single session. So it's possible that in just a matter of a month or 2 months, you'll see gold already at 5,100. So where am I going with this also? We're going back to the 1 hour time frame. Sorry, 4 hour. Was that daily? Yeah, there it is. So no, I was in the 4 hour. Okay, so this is the structure that I'm trying to show you, right? Magnified. So how did gold expand after the breakout here? Okay, so if this was the correction, this little correction, right? Look at it. This little correction, the breakout, it respected the imbalance that was left during the breakout. I'm going to repeat myself. I'm trying to project if there's going to be an actual pullback based on the theory that price and time are fractal. And if this were to hold, and my theory holds. So where did price respect the bounce in the little formation, in the small pattern? It did so in this imbalance. And this imbalance was the one left after the correction. So, in other words, after this correction, is there an imbalance during this move? Question. Is there an imbalance? Let's go see. Oh, there it is. Daily. Huh. What a coincidence. I started mentioning it earlier. Right there. From here to here. Correction. Breakout. Right? Gold is up. It's popping. It's going to go. Well, hold on. We left an imbalance behind. Let's go fill it quickly and then bounce. You see? And what is that? That's Friday's low. So it makes all the sense that the next daily candle opens bearish if it's going to be a bullish day and then closes bullish. It also makes sense if the next week is going to be bullish to open bearish. Monday, Tuesday bearish, reversal. What happens on Tuesday, everybody? NFP. What happened in the small fractal move? How did the gold break the fractal move? Look at it. After the correction, breakout, bounce, and expanded higher. You see this? It started expanding higher. We're going to have the correction of the initial push. It's just the beginning, by the way. You see, because this is going to probably just fill that imbalance and then make the powerful move. Remember, the bigger fractal move is just began. You see, the big move here that I erased. Where is it? There it is. This one, it just started. You see? So, in other words, we're basically seeing, as if we were even in a smaller fraction of the move, we're seeing this right here. We're just seeing this candle. So let's actually do the exercise to see where we are in an even smaller fractality, or however you know what I mean. I want to hide this. Okay, so what we're looking at, this push, notice that it didn't break the high yet. So we're basically right here during this first two candles. Okay, I'm going to zoom in and I'm going to repeat myself. Because these are the two highs that are in relation to these, what we're seeing here in a bigger picture is actually just this little push up to here, because it didn't take these highs yet, right? But all the way to the top, this push did not take the highs over there. So it's just this push up here. Let's go in the lower time frames to see if we find something similar to this structure and how it behaved. Okay, because I want to see if there was another dip down during this moment. In other words, I want to see if there's going to be a lower dip right here. Does it make sense fractally? Okay, so we're going to study Thursday 6 and Thursday 10 in the 30-minute time frame. There it is. This push. You see here this little bounce and back up. That's exactly what I wanted to see. Well, check this out. This little imbalance. Oh my God, this is beautiful. Look at this. You know what? Guys, please follow me. Bear with me. Look at this wick. Look where it respected this wick. There's an imbalance, right? Check this out. Look at this wick. And look at this wick. And what's in there? An imbalance. We cracked the matrix, people. I'm telling you, this is mind-blowing. Imbalance of the breakout move. Imbalance of the breakout move touches the wick because it's efficient and it's perfect. It already touched. I'm going to put a line right there. Right here. It dipped. It's balanced. The market is balanced. There's no reason for it to come back here anymore. And if it does, that's because there's going to completely manipulate price to retest this low end of the beginning of the push, and it'll just simply make like a humongous double bottom here, and it'll expand higher. But I don't think that's going to happen because I'm just so fascinated by this whole fractality, if that's a word, to price and time and price and how it and the patterns. So what would happen? What would happen next? The big move. You see? In other words, this was the beginning of the push. Look at the tip. Look at it. Oh my God. Look at this, guys. Look at this right here. Look at the high. Look how it failed to break the high here. And look at the retracement. Oh, that big dump is the same thing right here. Big move, dump, failing to take those highs up over there. And what happened when the market balanced itself? It just bounced back up. We didn't see that because it's Friday. The market closed, unfortunately. I can almost assure you that it's likely for tomorrow, or sorry, Sunday open to start bearish and retest some level here. Maybe if you measure from here to this high, the 60%, 61%, which is a previous area that held price. That's another thing I wanted to show you quickly in the 15-minute time frame. Look at these candles. These candles, the bodies are respecting this imbalance and all this structure. What did the damage and the manipulation was this wick. But the moment the market dipped below, whoop, it closed back up, and then it held price there, and then it started coming up. That's the thing. So if you measure from that low to the high it made before it closed, this is the 61, and it matches this area. That's where there's going to be a huge reaction to the upside. Should be, could be, would be. Okay? Now, look at this. It's incredible, isn't it? The wick, touching that wick. Once there was a pullback that failed to break these highs. Look at it. Look how this dump behaved. 1, 2, 3. Is if I zoom out to the daily and the 4 hour, it's the same as this big dump. 1, 2, 3. You see? So it's just all in a tinier image and proportions, but it's in essence it's the same thing. So I hope everybody's with me at this point, and if you're watching, subscribe, whatever, blah blah blah. I don't care, but you might. So anyway, let's organize our ideas again. Based on this whole fractal thing, there shouldn't be a continuation dump. This imbalance was already efficient and respected. Therefore, I think 4260 is going to hold. You probably must maybe see a retest, but it should hold. If it does do that, because it could also very well just open bullish. Why? Because if I go to the daily is already bullish. The daily is already bullish. You could just make a little low and then continue expanding, and then you just leave that imbalance there. Is it possible? Yes. How many times has gold not done that? It expands and it leaves those imbalances there. Look at this imbalance here, little imbalance there. It just goes. Another imbalance right there. It goes. You see? So this could be very well just another imbalance that is not going to be, the market won't just, it just won't give sellers that opportunity because they're already trapped. You see? And there are already more sellers getting trapped, putting a bunch of liquidity above all-time highs. So the market just flies through it. So that's my personal view. As you can see, I go completely against everybody. Everybody's saying, "Oh, the reversal started. That was the dump. It began. It's starting. Everybody sell gold." I don't blame them because they haven't taken the fucking time to spend thousands of hours to look at price in all aspects, and they haven't drawn the market every day how I do and realize this. Because when I draw this, I'm like, wait a minute, I've seen this somewhere. And I go back in time, 1 minute, 5 minutes, 1 hour, and I realize this. So all this being said, I have two theories. I know you're probably thinking one bearish and one bullish. No, they're both bullish. One of them is just less probable than the other because one of them is bullish almost immediate. The other one is simply waiting for an extended pullback or an extended bearish correction, but it's still bullish overall. My first theory and weekly forecast ahead. Let me clean the chart a bit now. Or actually, let me jump to another one. Let's use this chart. I think I don't have any drawings here, and if I do, too bad. So I'm going to take previous week's high and use it as my potential entry level, which is these wicks, all these highs right here. Okay, if I actually go to the week, it is right there. The daily, perfect. So 4 hour, that's it. Now, what happens with this theory? It was already tested. That level was already tested. So that's why I'm trying to say we might not even see a pullback. But let's say we do. I would expect the next daily candle or the next 4 hour candle in this case, in this chart, and I'm going to actually zoom in. So I know what everybody's saying. Oh, there's an imbalance there. You know, the market respects the imbalance and then completely dumps. Sure, yes, that's the only thing that's throwing my idea off, because price could very well fill this imbalance and then dump quickly to target these equal lows. Why could it do that? Remember, we have a major trend line here that price has been respecting. We have these equal lows that are very tempting, and we have a big imbalance, weekly imbalance right around here. Okay, that would happen if the NFP does not favor gold. It's surprisingly positive, which is yet a simple manipulation of the market, because the markets are rigged, guys, and the governments are going to do anything to paint the picture pretty. So it wouldn't surprise me if they say, oh, NFP is surprisingly good. Oh, people are having jobs now. That's very interesting. So, and then you have the stock market rally, then you have the dollar rallying, and then you have gold dumping. It's okay. That'll just simply induce more sellers. But on the bearish scenario, so I can get that out of the way. And please remember, I don't think this is going to happen, but this would be the case, the bearish case, where we have the respecting this imbalance. You could measure, for example, from the top to the low, the market already touched the 50%, but the 61% could be that entry, and then you could target the 61 extension and the eventual, essentially and potentially 100% extension. So double the move. Yeah, that's likely. Sure, that would be in the case that next week fails the weekly imbalance and then expands after an NFP or during an NFP. Who knows? What I think is actually going to happen is bears are trapped here. Bears are trapped since on Friday. Actually, bears have been trapped since here. Here they're selling, and then they sold more here. Resistance. They sold more here. They sold more. They sold, and so what does the market do? Just boom! It rams through that liquidity, because where are all these people putting their stop loss? Up here, up here, up here, up here, up here, right? So why would the market start its way there and then reverse again, and sort of offer the cleanest and prettiest opportunity for sellers to sell again or protect themselves or whatever? Again, that's my mindset. I could be wrong. Sometimes I'm wrong and I lose. So it's just, but I want to, I'm speaking out. So I think what's going to happen is they're going to have a little dip and a humongous rebound. And that could happen on Monday, because since NFP is on Tuesday, and going back to this whole fractal thing, we're seeing just this push up. We're seeing the beginning of this push up in relation to the bigger fractal picture. There was already a pullback here, and then followed by this huge continuation. So this is the pullback of the bigger move, and this was the beginning of the continuation that failed to unfold because the market closed on Friday. Okay, so that being said, if we go down to the 1 hour time frame, actually even the 30-minute time frame, I'm going to start marking important levels. Remember, this was the weekly high, right? That I think was already tested. Let's see, the first level, the first buy area would obviously be at that low, because I would actually call this extended buy area, because my buy area is all this. This is my buy area. Okay? Why? Because in the 15-minute time frame, price already respected all of this pivot zone. This is a pivot zone. Remember, I sent somewhere on my Discord, there was a pivot zone here, and the candles respected it. It's a pivot zone because this was a low, this was a high, this was a low, this was a low, a high, a low, a high. So the market is dancing, it's flipping, it's going up as a pivot, like a pivot. The pivot got respected here. Pivot held. So probability is bullish because the pivot is a support. Should the pivot be a resistance, probability is going to be a resistance. So another thing that's interesting is if we obviously measure the low to that high, the 61 and 70% is basically overlapping my area of pivotness. So what do you have there? A double bottom. Retail thinking, right? Double bottom. So something like this would be the potential retracement, and then somewhere around here it'll be, whoop, see ya, I got you all, and then the market will do this, and then bam. Seriously, it will just massively explode up, because that would be the actual move after the big correction. So this is the big correction, this is the move, this is the drop, that was the drop, that's this drop. You see, remember, again, these are the highs from all the way at 4,380. This is the 1 2 3 4 whatever, big up, fails to take the highs, huge dump. What's this dump? Look at this dump. From this low to that high, 50%. From when it breaks, 61%. So from this low to this high, you see what I'm doing now over and over? Where does it land? 50 and 61%, almost 70%. So the numbers are the math is mathing, right? The numbers are adding. They're matching everything too. So look at what and then again the wicks. Remember the little wicks. So these little wicks are this wick and this one. You see that? So everything is mathing. So what came next? Look at this. What I'm going. This came next. You see that? So after that, this huge move came next. Because I can guarantee you, when this drop came, everybody was shorting. Oh, this is it, double top. All this liquidity down over here is going to dump. And what happened? What did it? Whoop, fuck you all. I'm out. So, same thing is going to happen here. That was the dump. Here's another little dip, potentially taking the low. I'm not going to lie. It could also do this quickly and then manipulate it up. But I think it's going to hold pivot zone. And then, bam, like it's fly to the moon. NFP, I think, is going to suck for the economy. I hope it does, because then that proves that, yes, you're in trouble. And it's not that I like it. It's just that it frustrates me and it gets me angry that humanity is so capable of lying and manipulating and playing with people around. And it sucks. It sucks. You have the people in power that are just only think for themselves. And the world is not in such a pretty place. And so, anyway, people are going to start seeing like, man, this is not good. So then this is going to come down and then continue moving higher. This is going to be the move. So to finish this move, the magnitude of it was almost, let me use this, from the move down, this push up, it was almost 1.25% of it. I think you could say basically almost 1.5. One and a little bit. Let's talk in normal terms. So 100% and a little bit. What does that mean? That means that is from this to here, right? Because this is what we're looking at. We're looking at this big push up. The next move is 1 and a little bit. I think it was like that, something like that. Okay, and where does that take you? 4,560. Okay, how did I get that? Again, I'm gonna do it again for you all. This push up to here before it had the dump that failed to break the resistance. I want to see, in relation to that distance, what came after the pullback. As you can see, it is, oh, sorry, I did it wrong. It's basically 100%. Look at it, it's perfect, 100%. Because you put it right on top, it's 100%. It's the same thing. Now that's just the first one, right? Because look at that, you have a correction and then a continuation. You see how it's all fractal. So I'm gonna correct this. That's the move that's gonna come. Initial move. During NFP, we're gonna break to all-time highs, 4,500. The math is mathing. And then what did we have? We had, in relation to this continuation, a retracement to the 50% almost of the move, right? And that brought the triangle pattern here. So this corrective pattern is gonna come up here to the 50%, right around here. And then what came after this? Big continuation push of 100%. You see that? So what's going to happen next? Another big push after. And where does that take you? 4,650. I hope you are following me. I hope the visual is making sense. I hope this whole fractal thing makes sense to you. And so you have big push followed by a correction, continuation of the same distance. This is it. Big push, pull back, which is this one, this little one, followed by the same move, 100%, which is this one, right? Because we put it from here to there, and that's where it got. So this push to here, and then the correction, which is 50% of the continuation push up to here, and that is just above all-time highs. And once that pattern is done, it'll expand this much. What is that much? The whole push itself. So the big push followed by the big push. In other words, this big push, correction, big push, you have this big push, correction. Oh, I'm actually getting it a bit wrong. That's the push, that's the correction. There is the correct fractal. 4,800, 4,790, let's call it. Okay, so here, zooming out a little bit, you're seeing it. Zooming out a little bit, you're seeing it. This is the big push I'm looking at, and I'm going to put it red. This push followed by this correction. It moves the same distance. You see that? And what is this push? This. Okay? So after the correction, something like that, more or less. So let's say 4,760 to 4,800. Okay? All right, I'm going to leave it here. This was a much longer video, but I tried to go all in on everything that I could think of to help you understand how I'm interpreting the charts and waiting for price to behave in specific areas. Of course, keep in mind the bearish scenario that I showed you that could potentially grab the liquidity below 4,200. And other than that, I hope you enjoyed this video. Take care. Bye-bye.